in listen-only mode.
All right, guys, welcome. Welcome to tonight's call. We are excited to have the one and only Daniil Kleyman with us. We did an interview with him earlier in the year, and of course his partner in the last couple weeks. And tonight we're going to be talking with him about the topic of obtaining private investors. More specifically, turning the tables and getting private investors coming and asking you, in effect, becoming the prize and getting the private investors seeking you out to invest with you. Daniil is the creator of Rehab Valuator. We have links at the bottom. We actually are an affiliate marketer. He's one of only 2 products that we market, and also the Bank Elimination Blueprint. We have those linked at sellerfinancehelp.com and yourprivatemortgage.com. So moving right in the call, and as we have done in the past and we'll continue to do so, we got 3 more of these scheduled. We're going to get right into it. So Daniil, welcome. Welcome to tonight's call.
Thanks, guys. Happy to be here with you. You've provided such awesome content to my list and my subscribers in the last couple of months, twice actually, that I hope I can live up to it and return the favor.
Nice. Let's do a sound check, guys. Can we get a quick yay?
Man, who's that good-looking guy on the right?
And the sound check. Yep. Sounds good. Can hear you. Perfect. All right. So Daniil, getting right to it. As you know, these are quick and to the point calls without the fluff. How did you find yourself here? I know you have a really interesting. You and I are both Russian, and you obviously found your way into the U.S. Later than I did. But what can you tell us a little bit about your background, and then also your work background, and how you found yourself here?
Sure. I'll give you kind of the quick story. So I immigrated from Russia with my family. I was 12 years old, and we were basically refugees. We moved to Virginia. We're Jews, so the situation in Russia was pretty nasty towards Jews, and it was just not a very safe and opportunistic place for us to be anymore. So like most Jews, we left Russia. We immigrated, came here in '92, right as the wall collapsed over there. And my story from there is pretty standard. I went to high school, got good grades. I was sort of pushed by my family to get a good education and try to get into the best college I could. So I went to University of Virginia, majored in finance, and like every college, the whole goal was then to go out and try to get the best, most high paying job you can. And I mean, that's what colleges do. They mold you to, unfortunately, just become employees. They just crank out employees, and that's fine. From there I couldn't wait to get back to a big city. So because I grew up in Moscow, and I thought Virginia was rural, and the cul-de-sacs have always freaked me out, and it's just strip malls aren't my thing. So I couldn't wait to get back to a big city. So I got a job in investment banking in New York, and I moved to New York, and I started my career on Wall Street, and I hopped around between a bunch of shops. I primarily work with bonds. I work with mortgage-backed securities and then collateralized debt obligations, which is one of the securities that's, I guess, primarily responsible for contributing to the market crash of 2008. So you guys can thank me. Or, I played a small, tiny part in that, I suppose. So I hopped around between a couple of firms. I worked for Bank of America. I worked for Merrill Lynch, their hedge fund. I worked for a French bank. Then I ended up at Bear Stearns and then J.P. Morgan. And my specialty was bond trading and then deal structuring. So my last job when I worked at Bear Stearns involved structuring probably some of the most complex financial instruments that have ever existed. And we can argue about their benefits and pros and cons of those things all day long. But I mean, these were some pretty intense deals that I got to work on. So but the whole time I was working there, I was getting paid pretty well, and on paper, my life looked great. I mean, I was 25, 26 years old. I was making six figures, lived in a nice apartment in New York, but I worked 100 hours a week. I was making somebody else rich. I didn't really feel like I was building anything, contributing anything. Despite my career looking good on paper, I was always kind of freaked out about the fact that I'm not really accomplishing anything. And so in the back of my mind, I always wanted to be an entrepreneur. I always wanted to go out and work for myself and do things on my own. And I read Rich Dad, Poor Dad. And I think that's how a lot of people got started in real estate. Light bulb just goes off on your head. It's such a simple book, right? People that work for other people, no matter how much they get paid, never get wealthy. The people that get wealthy are people that buy assets and have those assets work for them. It's people that build businesses and have those businesses work for them. That's how wealth is created. So that pushed me into real estate. And when the market crashed, I said, all right, I've had enough of this. I just don't want to be here anymore. So I moved back to Virginia, and I started two companies. One was my real estate investment development company. Another one was a software company for real estate investors. And that was 2009. And now here we are.
You know,
go ahead, Mark.
One thing I wanted to point out, which I really enjoyed, I can't remember, you like us put out a lot of content for people to learn from, and you encourage that, and I think we both mutually admire both organizations and company, for obviously Jim as well for doing that and promoting that and being a leader in the industry. And I listened to your calls, and I remember listening to one, I can't remember who it was with, but you had mentioned something really interesting that struck a chord within me, and really hopefully can resonate at reaching out to the people that are listening on the call. You had made mention that when you were looking at doing your software, that you did an internet search and you noticed that there's a bunch of software out there, and you kind of tied that to the fact that a lot of people don't even get started, and they sit there and the analysis by paralysis, and and had you allowed that thought to resonate within you, you never would have actually put together your software. And I thought that was just so universally true with respect to the people that we're trying to touch and help, and those would be people that are trying to move on the other side of the fence or quadrant, as Kiyosaki talks about it.
Oh, listen, you can talk yourself, if you want to, you can talk yourself out of waking up in the morning. I mean, you can literally just find, you can talk yourself out of anything. And I think a lot of people get stuck because they say, oh, well, there's too much competition, or too many people are doing this. Who cares, right? And I've always said competition validates the opportunity.
Yeah.
Right. So if I did an internet search just for shits and giggles when I started with the software, and I mean, you could do Google listing for real estate software, and you'll get like thousands and thousands of results. Companies that have been around for years, that have SEO that's they've been investing in for 5-10 years. If I hired a consultant to do an analysis for me and say, should I get into this business or not, 10 out of 10 would say, don't do it. You want to make money.
Right.
There's too many of them.
Right.
Hey, Daniil, this is Daniil Terry here.
Yeah.
And I have a question going back to your background. When you read Rich Dad, Poor Dad, and when you read some financial books, George Anton wrote a book, Banker's Code, that I found was the next one after that was just phenomenal. What the light bulb that was for me, and we're getting into, like, the conversation is getting private investors. The light bulb that went on for me was when whether it's Rich Dad, Poor Dad or the Banker's Code, how money is created by banks by lending money to other people in exchange for more money, which is interest, over time. And so it's not like, okay, you when you manufacture a product, you have to invest in resources, land, labor, and capital, and you get a return off of what you make by selling it. banking is like you're making money out of thin air by just letting someone else use it for a period of time.
And it's not even your money.
Right.
You're taking in deposits, paying them squat, and then lending those deposits right back out.
That's another subject. Yeah, exactly. that's the spread. And when that light bulb went on for me, and I realized that I didn't have to buy property, I didn't have to, do all these things that people are doing, fix and flip. I mean, sure you can, and there's deals and things that happen, but really if you go down to the base of it, you want to have access to money or control, and you want to create an income or interest, and also the tax laws and everything else are beneficial to having interest income, passive income. It's just like, why is this concept so difficult? Have you ever thought of these things or?
Yeah, I mean, I think about this stuff all the time, and that's a definite light bulb. I mean, the idea is, whether it's your assets or it's your money, you want that to work for you. It's a hell of a lot better for that to work for you than you going to your 40-hour-a-week job. I mean, if you enjoy your job, God bless you. It's fantastic. If you're one out of 10 people that actually truly likes what they do, continue doing it. And there are a lot of people. There are doctors, lawyers. They enjoy what they're doing. They're making a great income, and they have no idea how to invest in real estate. But if they're smart, they're putting their money to work for them somewhere.
Or they can find somebody that has that ability to put their money to work for them, and they can be the bank and create this income stream or this money out of thin air by just letting someone else use it for a period of time.
The other book that I read recently was Warren Buffett's autobiography, The Snowball Effect, and he basically credits his huge wealth, like $60 billion. The whole book is called The Snowball Effect because of compounding.
Right.
Interest, compounding.
Yeah.
There's no concept that is more powerful. I think it was like Einstein that said it first. He said there's no more powerful concept than interest compounding.
Yeah,
right?
He called it the rule of 72.
Right. Well, the rule of 72 is how many years it takes you to double your money, right? And that's a great rule of thumb. You take whatever return you're earning, let's say it's 10%, and rule of 72 then says you divide 72 by 10, and it's going to take you 7 years at that rate to double your capital base. But compounding is a hugely powerful concept.
Mm-hmm.
Yeah, because you're taking the money you earned and using it. You never had it, so now you're using it to make more.
Exactly, and it's once you can sort of educate people about those concepts, it really I think opens up their eyes.
No.
Well, I'm 56, and it took me, because I thought I was going to be a land baron until the crash, and I think, and I'm not dumb or stupid or whatever, but I got caught a little bit and survived it. You always have to survive, but the light bulb came on to me when I could, just lend the money out and get the returns, or someone wants to put up their money and like an investor or not an investor, but somebody that has a retirement plan, they don't want to put their money at risk. You can buy, you can get notes, you can really helps. It's a win-win when you lend money to somebody else, a homeowner or a first-time home buyer. When I was growing up, or not growing up, but early in the 80s when I first started selling real estate, my grandmother would lend money on seconds. My mother was a real estate agent. She'd lend money out as a bridge loan to different deals. And she loved that money and she counted on it. And whenever the notes paid off, she was sad because she had to go put it back in the bank and get less of a return.
Yeah, reinvestment is, sometimes that's a pain to have to reinvest your money.
Yeah, well, and that's why I can't see how hard money lenders, that only want to lend their money out for 6 months because they get the velocity or whatever.
Mm-hmm.
Why don't they, if they can get a decent rate, maybe it's not 12%, but it's 10 or some, but they can have it for 5 years, or that's, to me, seems a smarter move in a way. But I guess everybody has their own thought patterns on that.
Yeah.
So.
Yeah, that's the hard money lending is a job in and of itself. To do it properly.
Yes, it is. Yes.
You're always having to put that money back to work into new deals. But if you can do it consistently, I mean, they're getting 15, 20% return on their capital base if they're doing it properly, which is, that's rule of 72 for you right there. 3 years, you just doubled your capital base. It's fantastic.
Yeah.
And that's a job, though, too. For some, that's creating a job when you got to keep cycling that money through.
I think you gotta love it, right? I mean, anybody that becomes successful at anything they do, anybody that becomes truly successful, you have to love it, because the thing is, to become good at anything, to become successful at any business, it's freaking hard. No matter what anybody tells you, no matter what no matter what anyone says, to truly create an exceptional business, it's a crap load of work, and if you don't love it, you're gonna quit.
No.
Yeah.
And if you don't love it, you're not going to excel at it. So
you won't be good at it.
No, you may be good at it for a while, but then you'll find yourself working another 14-hour day, and you're gonna say, oh, like, why am I doing this? I hate it. And after a while, the money isn't everything. You've got to. A lot of hassle comes with it, and you've got to love what you do to be willing to put up with the hassle.
Yeah.
So, I mean, the successful hard money lenders, it's a job, but they love what they do, just like anything else.
Yeah.
For sure.
Mark, do you have a question?
Yeah. So along those same lines, Daniil, about I guess there's the thing to avoid, and that's certainly talking yourself out of things and looking at the world from a perspective of scarcity, which certainly none of us do. We share our ideas and concepts and strategies openly and freely with the people in our industry. I saw. We got the opportunity last week to speak at the Los Angeles Creative Real Estate Investors Association, and after we spoke, they had people get on the microphone in this big room, and they asked questions, and this guy walked up, and it was really interesting. He had the most confused look on his face. He didn't even know what question to ask. He just knew he wanted to ask me a question. And you could see the debate going on in his head of like, well, I want to ask him 3 questions, so which one should I? And so I actually stopped him, and I said, all right, stop. I can tell by your affect and where you're going with this, you're overthinking it. I just gave you one very clear strategy for you to put into practice immediately. Focus on that. And then he's like, but and he's already thinking about what's going to happen when he has the deal, and so what's your take on that? Like, why I personally think that people fail because they need to know everything, and they won't dip their foot in the water and test the water, and they have to know all the answers, which none of us know all the answers, and certainly everything changes, and by the time, even if you did know all the answers, it would have changed radically. What are your thoughts on that? Why do you think people fail?
I think it's a symptom of the times and of our technology and of the flow of information. It's absolutely impossible these days not to drown in information. Mm-hmm. And God forbid you're curious and you start Googling something. I mean, you're just going to be in it for days. picture yourself 20 years ago. How much easier was it just to get things done, right?
Yeah.
We didn't have this. And look, you and I were in some small way responsible for it because we bring people content, we bring people education, and
Sure.
and that's our job. But it's so easy these days to listen to you guys and say, oh man, what Mark and Terry are teaching sounds pretty great. I'm gonna go try it. Then before you're out the door, you listen to somebody else, and now you're doubting yourself because, oh man, maybe that's a better way to go. Well, who cares? If you're just gonna search for the ultimate strategy or the ultimate technique, you can search the rest of your life. You got to pick something and stick with it and do it. But I almost can't blame people at times because it's just so easy to get absolutely inundated with options and information and advice, and you just, at some point, you just have to stop and block it out.
Yeah.
Decide what you're going to do and at least go test it. Give it enough time, give it enough resources to see if it works. There's always going to be something better and shinier. Always.
Yeah.
Always.
Yeah.
And new things are going to come out tomorrow and the day after. And if all you're doing is just chasing that stuff, you might as well just not start to be at all. You know?
Yeah, for sure. So, what were some of your learning lessons and along the way, and what were the triumphs and what were the defeats that you experienced getting and bringing yourself up to this point?
Well, I think that's one of the things that I actually managed to do well was I picked a strategy and I stuck to it. I think it's, if you're investing in real estate, whatever it is you're doing, I think it's great to be educated about multiple exit strategies and multiple acquisition methods and wholesaling, fixing and flipping, buying and holding. But I think the people that become truly successful, they create a model that they can almost blindly follow,
Mm-hmm.
and then scale that model.
Yeah, 100%.
So I did wholesaling for a bit. I fixed and flipped a few houses, but then I very quickly transitioned to rehabbing and then holding, and that's what I've stuck to. And I'm getting ready to throw in a couple of new build houses that I'm going to spec out and sell. But that's really just a matter of the opportunities there. But I think if you really want to become successful, you need to pick a strategy and become really good at it. And you've got to become, I don't know if you're going to become the go-to guy in your market for that, but you should, whatever you're doing, you should start being known for it. Right? If you're the guy that wholesales, then you should become the guy that people know you're the wholesaler to go to, right?
Right.
If you're, whatever it is you're doing, I think it's important not to do a bunch of different things. The other important thing is I saw a Facebook post recently from a guy that said, I am getting ready to start wholesaling. How many VAs do you think I should hire? And I said to myself, are you joking? Like, you've got to do this stuff yourself first. You've got to, before you start outsourcing things. I'm all for outsourcing. I'm all for hiring. But if you're brand new, it's great that you want to scale whatever it is you're doing, but you should learn how to do all those things yourself first. Because you'll never be able to manage other people if you don't know what you're going to manage, and if you don't know how a task should be performed yourself, how are you going to know if they're doing it correctly?
Yeah.
So picture me, right? I was a guy making $250,000 in Wall Street. I left. I moved back to Richmond, and I spent 4 months with a buddy of mine rehabbing these two houses. I'd wake up at 6 in the morning. I'd come home at 9 p.m. and I did everything possible in these freaking houses. I mean, we did framing, we laid floors, almost everything except for HVAC and electrical work, we did ourselves. I
Isn't that
learned.
isn't that one of your best memories?
It was fantastic. I mean, I literally
Yeah.
spent 4 months driving beat-up pickup truck. So I'd go days without, you know, without like having breakfast and lunch. I think I went like a month without shaving. We were in a hurry to finish these houses because we've already had leases signed with people. So I spent 4 months literally just learning as much as I possibly could about rehabbing. We gutted both of these houses, and I learned the entire process. And as I was doing it, I said to myself, man, you know, I'm just only ever going to do this once, because as I'm spending 4 months doing these two projects, I've just missed out on 10 other deals. But the experience was invaluable, because then I was much better able to talk to contractors, hire contractors, evaluate contractors, evaluate whether they're doing something correctly. I mean, by no means did I immediately become an expert in all this stuff, but you know what? It helped a lot. It helped a lot. So that's the thing that just really jumps out about how people approach.
And did it not catapult you to having what you sell as a software product? To say,
Yeah,
you know,
yeah,
if I can,
of course. You know, that helped. Understanding the process and understanding how it works allowed me to better craft our software products, and I wouldn't trade that experience for anything. I mean, I literally just and that's how you learn languages, right? Full immersion. You want to learn a foreign language? Sure,
yeah.
you could Rosetta Stone it for half an hour a day, maybe. That's what their commercials say. But if you really want to learn a language, you immerse yourself in that language and the culture, and you'll learn in 6 months. And that's, I think, that applies to a lot of things, right? You really
Sure.
want to learn the business, spend at least a little bit of your time doing every aspect of it.
Yeah,
Very
100%.
good.
So, Daniil, one thing, one critical distinction, and you talk about this a lot, is turning the tables, and I think for a lot of people, it you know, it allows them to separate themselves from amongst the rest. And if you guys are listening to this and you don't have Daniil software, as soon as you're done listening to this, go ahead, and the link's right there. Yourprivatemortgage.com. Download his software, and I mean, we use it in our practice, and pretty much everyone that we know uses it. We're not affiliate whores. We don't have a million products. We you know, we have we have two of Daniil's. The other one is right there as well, Seller Finance Help. And but you know, can you talk about the idea of turning the tables?
Yeah, absolutely. So one of the things that, you know, Jim, my partner, and I teach people, and whenever anybody sort of asks me about how to go out and find money, the first place to start has to be a mental shift that I think is crucial. Most people approach private money or just whatever, just finding investors for their deal from the point of view of what do they need. I need to borrow $60,000 to renovate this house, or I need a private lender. Nobody cares what you need. Like, just nobody cares at all. I'm sorry, it may be harsh, but it doesn't matter what you need, right? You're approaching it all wrong.
Yeah.
You instead of approaching your needs, you need to position yourself as somebody that can add value to other people. What do you bring to the table? What are you offering? What are you contributing that other people can't contribute? So if Terry is a private lender and Mark has a project that he wants to fund, instead of going to Terry and saying, "Hey Terry, can you lend me some money?" Go to Terry and say, "Terry, I have an opportunity to work on a pretty lucrative project that you can invest in. Your money will be secured by a first deed of trust in real estate at a low loan to value. You're going to get a consistent rate of return. This is a much better place to put your money into than CDs or the stock market. I can offer you both current return and long-term upside, or whatever, if you're doing short-term projects. Just if Mark approaches Terry from the point of view of what can Mark contribute to Terry's life and how can Mark improve Terry's life, you're going to be a hell of a lot more successful.
Yeah.
And then guess what? If Terry's money is sitting in the CD somewhere earning 25 basis points, and now he's able to invest money with Mark consistently and earn 6, 8, 10%, if Terry's got money, chances are his buddies have money. And chances are if Terry has problems of where to invest, because guess what? It's really hard. If you're sitting on a couple of $100,000, chances are you're thinking about this all the time. Where can I put my money where I can make it grow? Where can I get that compounding? Right?
Safety.
Preserve the principal, but get a decent rate of return. Where can I make my money grow? That's a serious problem for people. It's not easy. So chances are if Terry has that problem, the people that he associates with, they probably have those problems as well. And Terry's going to go to them and say, hey, I found a guy that does what he says he's going to do. He treats me like family. He treats my money as if, it's his own. He keeps his word, and he knows what he's doing. Now Mark is going to get phone calls from Terry's friends. Because again, money is more common than people that know how to use that money effectively.
Yes, absolutely. And the banks know how to use it, but they're not going to tell you how to do it.
Yeah.
They want it.
Yeah. So that's the first part of turning the tables, right? Stop approaching people with your needs. People don't care what you need. People want to know what you can do for them. And once they figure out that you can do for them a lot, they'll come to you.
Yeah.
They'll send their friends to you. When you become known as the guy that does real estate deals and you're good at real estate deals, people are going to come to you from out of nowhere eventually. I mean, I'm not even taking in new investors right now, but I have people approach me out of nowhere every once in a while, acquaintances, guys I haven't talked to in a couple of years, and every once in a while I'll get a Facebook message or a text saying, hey, I'm thinking of putting some money to work in real estate. Are you looking for investors? It's pretty cool to be able to tell them no.
Yeah.
But it's become known for being good at what you do and keeping your word. And eventually it's a slow build, but people will come to you and money will find you. The other thing in our software obviously helps with that is from day one, approach this like a business, right? Position yourself as somebody credible, as somebody that really understands the numbers, that's somebody that really understands how deals are structured, and communicate that to people effectively, right? You need to be able to not only communicate to people what you can do for them, but you need to be able to communicate to them how the process works. Because to somebody that's new to real estate or not familiar with real estate, it's crucial that you're communicating concisely but effectively to them how the deal is structured, what they're going to earn, how they're protected.
Daniil, how do you know when someone has enough information and they're comfortable, in the process? Do you ask them, like for instance, communication? If you've got a new client that's investing with you, do you ask them how they want to be contacted, or how often they want to be, let them know what the process is? How do you go about doing those things? Is it case by case? Individual personality?
It's always case by case, and they'll ask you questions, right? And I think you've got to start by asking them questions, right? Too many people are deciding what they need, and they're putting that in front of people. you start by asking them questions, right? What are their investment goals? What are their short-term goals? What are their long-term goals? What's important to them? Is it preservation of capital or growing their money aggressively, right? What kind of risk are they comfortable with? You know,
Yeah.
do they have to be on the first lien, or are they okay doing a bridge loan or being on the second lien, right? I mean, you'll figure out a lot about the people you're dealing with by asking them the right questions.
Yeah.
Before
Yeah,
you
that's
even,
like
before you
yeah.
even pitch your deal.
That's like asking someone if they want to buy a reperforming second or if they want a first trust deed on, on a very good, loan to value.
Right. So until I know that your goal is aggressively growing your money and not necessarily preservation of capital is your first priority, I'm not going to offer you that reperforming, second lien, because that would just be silly, right? I mean,
Yeah.
So you'll find out a lot about people you're dealing with by just asking them the right questions, and that also positions you as somebody that actually gives a crap about what they want, right? And
Right.
that's really important too.
Yeah.
So
Communication, very important.
Yeah, it's interesting because we talk to obviously investors a lot, and they always want to hide. It's like if they don't tell us what their rate of return is, we're going to somehow deliver a higher rate of return, when really they want us to go on some kind of wild goose egg chase where we're looking and seeking something that we don't even know would even match what their yield is. And it's interesting, actually. A lot of people that call themselves investors don't even know what a yield is or even how to calculate one, and it boggles our mind.
people don't take the time to educate themselves.
Yeah.
It's sad, especially. I mean, dude, now you have no excuses. There's so much information out there, paid information, free information, anything you want to know. Just you Google it.
Yeah. Yeah.
You want to figure out what an internal rate of return is? You don't need to go to college. Google it.
No, you don't. There's plenty of information for that.
Sergey Brin will tell you, and Larry Page. They will explain it to you.
So Daniil, I just came back Monday from the East Coast. I spent 2.5 weeks out there driving through Pennsylvania, Ohio, and New York, and my eyes got very open to the rest of the country because I'm from San Diego and I grew up in LA. Haven't been past Arizona or maybe even Vegas, and I saw. I was really impressed with Pittsburgh. I just see that a lot of new construction going on there. I see a lot of things happening. I saw Ohio is like in the doldrums, and a lot of old homes that are dilapidated and abandoned. And so what do you see on the East Coast? I'm just kind of interested, because you live there, a little bit further south. But what do you see with what's going to happen with all these homes that are all, 100 years old or more? What's going to happen to them?
Well, I don't profess to be an expert in other markets. I really just kind of stick to my own backyard. So I mean, I can't really speak for the rest of the East Coast. But what I'm seeing locally in here in Richmond, Virginia is I live and I do most of my development in a neighborhood that has a housing stock that's 100 plus years old, and certain local and state and federal incentives help. A lot of these houses here are eligible for historical tax credits, and that makes it really worthwhile renovating them. There's nothing wrong with. I think the crash really actually helped to rebuild a lot of the old housing stock, because you finally could afford to buy these houses cheap enough to where you could gut them and rebuild them, and for all practical purposes now they're well, they're not quite new construction, but I mean, if you properly gut a house and rebuild it, it's going to last a long time. So around here where I am, I think the crash was instrumental in rebuilding a lot of these neighborhoods, believe it or not. You know, I think people look at it the wrong way. People say, "Oh man, the market crashed, everything went into foreclosure, boo-hoo." But you finally could afford to buy a lot of this housing stock at the price where you could renovate it properly. The problem is, as the market was going up, a lot of people were speculating, right? They were buying houses and they were under renovating. They were just putting some lipstick on a pig and flipping it to some unsuspected homeowner who was now getting stuck with deferred maintenance, and then those are the guys that probably end up getting foreclosed on because they overpaid and they bought something they should have never bought. So around here where I am, a lot of the housing stock here is completely refurbished thanks to the housing crash.
That's what I saw, happening in Pittsburgh, but what I didn't see happening yet in Ohio. So I guess it just has its own timing, and that's why people run around the whole country trying to find the next spot, I guess.
Well,
but,
it's also, not every area is gonna come back and gentrify, right? I mean, there's bigger factors at play, right? I mean, what's the job market doing? Are there any major catalysts locally for job creation and for investment? Not every neighborhood is gonna flourish.
Yeah, I see the fracking in that area. That was really something that I thought might be a catalyst, and I think it is in a certain extent. But I don't know moving forward because of the price of oil now again. It might cut itself off. So interesting. It was just an interesting trip.
I bet. I love road trips.
Much different than what I've ever been living with, for the last 30 years in San Diego and L.A.
Yeah, you've been really unfortunate with all that sunshine and the ocean, and you guys have a tough life out there.
It's 85 degrees today.
I know. Stop bragging.
So, we always wrap these calls up by talking about two things. One is, which we actually really talked about, but it's good to say it again. Advice for people that are obviously, one, wanting to make, immediate money, and we call that wholesaling, and we have a really great strategy. We call it reverse wholesaling. But we want to ask you, one is, short-term, long-term advice for people on this call that you give out, and two, what's your perspectives for the future? What are you working on? What are you focusing on? What do you expect to tweak and adjust going forward?
Oh, good questions. So short term, going back to what I said already, pick something and go with it. Don't pick a strategy, pick a business, learn it, do it. Don't outsource everything in the beginning. Learn every aspect of that business, and don't try to take on too much. And obviously don't get talked out of opportunities. The fact that you see competition means the opportunity is there. The fact that other people are doing this and they've been doing this for a while means if they're still doing it, they're making money. And very few markets and very few industries are a zero or a winner-take-all game, right?
Yeah.
Look at Facebook. In social networking, it's sort of a winner-take-all market. If you're not Facebook, you're screwed. What's the next social media site that's popular? Can you guys name it? I have no idea.
YouTube.
But that's different. But that's different, right?
That's not social, I guess.
Yeah, that's a different kind of site. But very few businesses, very few industries are industries where one or two top players controls 90 or 95% of the profits. It's usually much more spread out. And so you can go into the market, and if you approach it intelligently, you can get a piece, and usually that piece is going to be big enough to keep you fed for a while. that's how I approached the software business when I started. I mean, again, if I looked at how much software already existed, I'd get discouraged. But I said, look, this is a market where there is no clear winner. You can come in, you can outmarket people, you can create a superior product, and you can kill it with customer service. And chances are they're not doing it, and you can beat them. And even if you take a small piece of the market, it's significant. So don't get overwhelmed if there is competition. That's the short-term advice. Long-term advice is forget the strategies and techniques. Become known as the person that keeps their word. Become known as the person who will do the right thing, whether it's to your investors, to your buyers, to your business partners. Create an absolutely untarnished reputation and guard it. Real estate is a tiny, tiny, tiny community in your market. I don't care if you're in New York. All the major players in New York know each other. All the major players in your small town know each other. Create a reputation for being good at what you do and keeping your word. And deals will find you, money will find you. I can't stress how important that is. There's just too many shady characters in our business, and they never last. A lot of people choose to take some quick money and screw somebody over, but they're going to miss out on a lot of future business. I see it happen all the time, by the way. Even if you're wholesaling, or if, let's say, you're a cash buyer, a wholesaler brings you a deal. You go around that wholesaler because maybe he doesn't have a contract on the property, but he's just bird dogging. You go around him, sure, you can save yourself a couple of grand, but guess what? He'll never bring you deals anymore, and other bird dogs and wholesalers will know not to deal with you. It's just an example. So that's really the biggest piece of advice I can give you. Your reputation as being trustworthy and being really good at what you do is probably the most important business asset you're ever going to have.
I think that's awesome advice. I do, and I totally agree with it.
Yeah.
I hire in my construction business. I hire dozens and dozens and dozens of subcontractors every year. I have a reputation for paying quickly and always paying. And when somebody's busy and I need something done, they'll take my call and they'll come work for me. And there's a lot of guys here locally who don't even get their phone calls answered because they've either taken 6 months to pay or they haven't paid at all, or you shake somebody's hand and you say, this is the price of a job, and then when the job is done, you're always trying to talk them down, chisel them down a little bit. Well, you may win a little bit of money now, but guess what? They'll never work with you again.
Yeah. Yeah. We don't know any fix and flippers like that, do we, Terry?
No. No, we don't.
I'm guessing you guys are saying that in jest.
Yeah.
Yeah. So
that's awesome advice. I totally wholeheartedly agree with it. In selling real estate, I did a lot of short sales, and then some of them went to auction. And I remember some of these guys that would go to auction. They'd call me the day of the auction, and they'd say, "Oh yeah, we'll let you resell the property if we get it. Tell me, what the condition of the house is, and this and that and the other thing." And then, they end up with it at the auction because you can pull up the deed, and they won't even answer their phones, And it's like, it was like, you guys, it just doesn't sit well.
Or the classic is the renegotiation after you have a signed contract. I can't.
Oh yeah.
I can't see anything more creepy than that.
Yeah, those guys are the worst. They're like, yeah, here, let me just make you a really attractive offer now, just to get the contract signed, and then I'm just gonna beat the living daylights out of you, just nonstop.
This year I made $80,000 upside off of one of those deals. They went in to renegotiate on a fix and flip, and the seller said, you know what, I gave you a good deal, and that's it. No, and I came in behind it, and I said, okay, I'll take that, and I resold it. Mark knows about this, to a gentleman that bought it at full value for $80,000 higher, and I did the seller financing on it. And
That's awesome.
that rehabber missed out. They didn't even need to rehab it, So they, that's they're their own worst enemy.
Yeah, people are thinking short term, and they'll end up in this business short term.
Yeah.
Yep.
So in wrapping
They're
this,
almost shut down.
So in wrapping this up, I think talking about where to find deals, we affiliate market for your other product called the Bank Elimination Blueprint. The link is there as well for you guys, and that is sellerfinancehelp.com. You guys have a really awesome 1-hour training call, and I think it's Jim. It's been 6 months since I watched it. It's Jim Ingersoll talking about the 1 year, I think in 2008, where he killed it in wholesaling, and he talks about deal sourcing. And I think that's a great place for people to use as a reference point to. If you haven't watched the video and you're listening to this, you guys really should. It's not there just for us, for our company to make money. It's a valuable and powerful resource that you guys can rely on to figure out where to find your next deal, and really that's what it's about. Where can I find a deal this week? So. I think that covers everything. Terry, you have any last thoughts, or Daniel?
Daniil, thanks for coming on. I really, this is awesome information, and appreciate your time.
Yeah, my pleasure. I'll always enjoy chatting with you guys. I have a lot of respect for both of you, and like I said, the content that you guys provide is always top notch, and really approach this business intelligently, and that's the kind of people we like to associate with. So thanks for having me on.
Awesome. Tell Jim we said hello, and have a great night. Thanks for your time as always.
All right, will do.
Alrighty. Bye-bye.